All right. Thank you for joining us today. We put together a really exciting presentation for you. We want to take a look at San Francisco in general in the world of real estate and kind of give you a macro view looking back 10 years, kind of at the trends, seasonality, interest rates, neighborhoods. So Ing's put a lot of good work into this so that we have some visuals that we can show you on this. And I would say let's just go ahead and get started. What do you think?
Yes, absolutely. So in front of you is the 10-year trend for San Francisco in terms of total transactions, total closings. We go all the way back to 2014, and there are two bars for each year. The first one is the single family, total number of single family homes sold. The second bar is condos and TICs. And Amanda, you want to just educate our viewers a little bit about TICs?
Yeah, because TICs are a very unique type of property, and you do see a lot more of them in San Francisco than you tend to see in other parts of the country. And it means tenancy in common. And so whereas a condo, you own your airspace within your unit, and you own that wholly. With a TIC, you own an actual percentage of the entire building with the other people who own that building. And it was started because it was very expensive to live here, as it still is, and a way to have a more affordable housing options. We'll talk more about TICs in another segment down the road, or you can go to andysirkin.com to learn more information, but just know it's similar to a condo, but there are definitely differences, but we are grouping those together for our purposes today.
Yeah, for our purpose today, we didn't include commercial properties or rental properties or co-ops, but this is just to show you majority of a residential sector. On the top, this black line, that's total transaction volume. So here is 5646. In year 2014, 5,646 homes was sold in San Francisco. So that's what that represents. And you can see we actually have a very flat line in terms of transactions for majority of the years. And then it peaked in 2021. Amanda, maybe you can remind us what happened.
Yeah, I think unfortunately nobody needs to be reminded, but that was COVID times, right? That was when in March of 2020, all of us were told to go home, grab our toilet paper and cleaning fluids, and lock up our stuff. Wipe down our groceries when they arrive at the front door. All kinds of crazy things happened, we know. But at any rate, one of the biggest things that was very obvious was what happened in the housing market in San Francisco and throughout the country as well. But here specifically, we saw a lot of movement. First, what you saw in the first half of 2020 was, and throughout the country, kind of like a freezing of the market, right? And nothing was moving. Nobody knew how to deal with, how do you do showings? We can't have open houses anymore. There was a whole thing that happened during that time. And, as we do in this industry, we kind of moved with what was coming our direction. And we found ways to have certain forms that had to be filled out and doing private showings. We learned how to transact during that very challenging time period. And then what happened as we got, towards the third quarter, fourth quarter of 2020, and then obviously all through 2021, everybody started moving. I mean, we saw people who were moving out of the city. We saw people who were moving from 1 bedrooms to 2 bedrooms to 3 bedrooms, people wanting outdoor space who didn't have that, needing office space in the house, not wanting an open floor plan with their teenagers stuck in the house with them doing the online learning. I mean, it was wild times, but what that did result is what you see in this chart here with this huge peak there in 2021 of properties being sold.
Yeah, I mean, that was a major jump. Definitely everyone was moving for one reason or another, moving in, moving out, moving to different places.
And interest rates were incredibly low. So, on top of the fact that people had all these reasons that they wanted to move, they were not encumbered by high interest rates.
Yeah, but that changed, obviously.
Mm.
So if you look at next year, 2022, we're kind of back to our historical average. And then this in 2023, the transaction almost cut in half. In the same time period, the interest rate went up. So I want to show you a different chart. So this is from the Fed. You can see for the same time period, at one point in 2021, the interest rate was at the lowest. It's under 3%, definitely high twos. And then it jumped in 2023, almost reached 8%. And that's a time you see the transaction volume. I would personally call it the interest rate handcuff. People cannot afford to move anymore. Those optional moves just don't happen anymore.
And even if they can afford to do it, it's nobody wants to do it, right? It's very difficult to give up those great interest rates to end up having to pay a lot more just in interest, not in the value of the home on its own.
Absolutely. And, the cost of ownership in San Francisco is not cheap. That just made the housing sector so much less affordable for most people. So that's what you're looking at in 2022. And then since then, we have come up a little
Or
bit.
2023.
Yes. Yeah, right.
So, and then also, that the other thing, in addition to the rates going so high, which we'll look at a graph later showing historically that these are not the highest they've ever been, but this is also a time when those rates rose higher and faster than they have historically in terms of really from the summer to the end of 2023. It was a huge jump. So, people were kind of like deer in the headlights, right? What's happening? Oh, they have to come down soon, until we've gotten to the point where we are now, like Ying was just saying, where we're starting to see that recovery in units sold because people are finally, okay, well, this is where we're at, right? That it's coming to a sort of a level of stasis for right now.
A level of acceptance, let's say. People accept that the interest rate is likely to stay at the current level for a long time. And if they need to move, they move. But then again, still the level of transactions is lower than historical average. So whoever have moved recently, try not to move. That's one thing. There are a fair number of people who are priced out of the market. And also people who ideally would have moved up and just decide to wait it out.
So basically, this is also from the Fed site, and you can see this here. This is the chart going back to what, 1974?
Yeah.
75, 70.
Yep.
And you see this huge spike, right, in the 80s. And as we're looking at that, you're getting bumped at 18.22%, right? So a lot of times when people go, oh, these are horrible interest rates, it's terrible. Well, it's been worse.
Yeah, far worse.
Not in a long time, but when you're looking at 2002 here, we've got, it started coming down 12%, 10%, 9%, et cetera. And, a much more kind of regular rate was around this 5%, 5 to 6%. So I think that's kind of where we're headed in the current market that we're in.
We just got very spoiled with 2 or 3% interest rate.
And people started expecting it, and people who haven't been watching the market for such a long time feel like it's unprecedented, and it's not.
Yeah, what we see is for the new buyers, people who just enter the market, they don't know any difference. So for them, it is what it is. If it's 7%, they're okay with it. But for people who have 2.5% mortgage rate, that's a different story.
Definitely.
Right. So coming off this chart, we want to talk about pricing. We have been talking about, housing is one of your biggest investment. So is this a good investment? The short answer is absolutely yes. But how good is this investment? Let's just look at the numbers a little more. But in San Francisco, the bottom line is definitely one of the best investments you can make, assuming you buy the right property. Okay, and buy and sell at the right time, obviously. You cannot buy high and sell low. One thing we noticed lately, especially this year, a lot of people made a COVID purchase for one reason or other, and now they have to move because they bought at the peak of the market. So a lot of those people are taking losses right now.
And there are a lot of those people taking losses. Yeah, they bought something that was right for that moment, but wasn't right for the long term.
Yeah. So as realtors, we will say when you make such big decision, you should think long term. Think carefully about what your life might be 5 years from now, because it is generally a 5-year investment.
Yeah. I mean, what I always tell my clients is if you think that you're going to have some reason to sell in the next 5 years, then it may not be, the wisest choice to buy in this market.
Absolutely. Yeah, I say the same thing, 5 years. So let's just look at this. So this is also the 10-year trend, but we're looking at the prices now. So those are in terms of millions, right? Darker blue bar is single family homes, and the lighter blue bar is condos and TICs, as we explained earlier. So you can see the trend of darker bar going up. Back in 2014, median price of a single family home is roughly $1 million. Now, what's a medium house? That's generally a 3-bedroom, 2-bathroom house, let's say. In 2024, the definition is about 1,700 square feet. So just to give you a general idea. So let's go back a little bit. So back in 2014, you can spend $1 million to buy a single family home. And it went all the way up to $1.8 million in 2021 and roughly 1.8 in 2022. I think it's actually dropped a little bit, but just round about the same number. And then it dropped in 2023, as we talked about earlier. The drop for single family home is 12%.
In the year 2023. So.
Yeah, compared to the previous year. It's always year over year. Below that, I have a chart showing you the percentage. You can see it has been a great investment for majority of the years. From 2015 over 2014 went up 17%. And then it dropped in 2022, 2%, 2023, 12%, and went back up 9% in 2024.
So we're seeing a lot of recovery of that loss.
Yeah, majority of the loss has been recovered.
At least for the single families, certainly. The condos are still a little bit slower to recover.
Condo is a little different story. So recently, I had a lot of buyers coming from South Bay, or just other area out of town. They think San Francisco is still in the dump, that our properties are, just really, really cheap. I think we are expensive compared to many other neighborhoods of South Bay, let's say. But we have experienced a major recovery, as you can see from the numbers. So it's not nearly as a bargain as they thought it was, would be. The one interesting number I calculated is if you take the 10-year time period and calculate what's the average compound growth rate for single family homes, it's roughly 5%. Amanda and I did a calculation one day, right? We say if you buy a house for $1 million and they grow 5% per year, 10 years, you're at what, roughly 1.6, 1.7, right? So basically, if you have $1 million to invest, remember you leverage, put a down payment, you borrow the rest, and the compound growth rate out of the entire time period is 5%. So at 10 years, it will be $1.6, $1.7 million in market value.
And not to mention, you also get a house to live in.
Yes, and yes, you pay interest on mortgage, but you also get tax deduction for your property tax and all that.
Yeah, I mean, I'm a big fan of investing in real estate because when all else fails, you can live in it.
That's right. It's a home. It's a home for you to live. So it's just a little, we look at it differently, but it is also a great way to invest at the same time.
Absolutely. And a lot of the people who have been buying condos recently, I think, are getting great deals. I think things in the city that people have been concerned about are starting to go in the right direction in terms of some of the downtown core areas. And some of those places have been really great bargains, newer construction buildings that are selling at their release prices many years past release. So, something to consider if you're, looking at properties for investment in San Francisco.
Yeah, so let me just talk about condos a little bit as well. So you can see the condo market. In 2014, a medium condo is 0.9 million. That's a two-bedroom, two-bath condo, roughly 1,100 square feet. And then you can see had gone up to 1.2, but rather flat, and then dropped to 1.1. So at the worst of it, so it's rather flat market. Other than 2015, went up 13%. It has been, pretty flat and had a drop of 10% in 2023. Then we are back 2% this year. As Amanda was just talking about, condos have not recovered nearly as fast as single family homes. So condos are sold in, as 2015 or 2016 price today. We see a lot more activities coming in that market though. So we do see this market segment will pick up soon. But there are lots of bargains to have at this point.
Yeah, would you agree that, that you see the difference in that more so in these larger buildings that
Absolutely.
have a huge influx of units available?
Yeah, certain neighborhoods like downtown South Beach, Mission Bay,
Right.
less of like 2-unit condos like Noe Valley because they're more like a house.
Right.
But in the large new construction condos, definitely lots of opportunities. All right, so I am going to move on to some other data we think you might be interested. So this is the single family homes. We have a median price per square feet, number of list price received, and days on market. The median price per square feet for single family homes back in 2014 is $676 per square foot. Today is just roughly over, 1,041. And you can see went all the way up in 2022, then it dropped slightly. Percentage of list price received. Amanda, maybe you can explain this a little.
So in San Francisco, it happens more, I think, in San Francisco than a lot of other places, in that properties tend to be priced under the market value. And that is kind of a tradition that has happened over time in San Francisco. It's one of the reasons why it's really important to have a qualified San Francisco real estate agent who can help you to decipher what the true value of a property is. Sometimes for buyers, it can be pretty frustrating, right? You look at a list price and you have no idea, well, what does that mean it's going to really go for? Some agents price closer to list, but it tends to be tradition to price under the market value. So you see, going back in 2014 here, the percent of list price received, that means basically it sold for 15% over what the asking price was. So 115% of list price. And as you can see, that went up over these years and kind of fluctuated. In 2022, it was 118%, so 18% over. And then you see the dip there at 107% in 2023, so 7% over the listing price. And what happens is the hotter the market is and the more competition there is, when the house is priced under market, you get many more people coming through the house. There's a lot of competition, and that sort of frenzy, raises up the bidding wars and the price of the property. As the market starts to slow down and you have less competition, like we saw in the end of 2023, you see the listing agents kind of pulling back and pricing closer to the market expectation. So what we call a lot of times transparent pricing. But now, as you see in this chart, for the 2024 annualized number that Ying put together, we're back at 114%. So we're definitely moving back into that faster paced market from what we had last year.
Yeah, thank you. Again, people who are new to the housing market or people who are new to San Francisco don't quite understand this. A lot of times when they look at listing price, they said that that's a price they expect to pay. Not quite here. So
But they'll get angry. They'll get
yeah, they
angry
get
if
very
you want to
angry
put
at
the
us.
price in at list price, and then the seller says no. They counter back at a higher number. It's very difficult if you're not in the midst of this or it hasn't been explained to you to understand. I'm offering what they're asking. Why don't they take my offer?
Yeah, and also it really depends on the agent sometimes or the market. So it's really hard to understand the value of the property just based on the list price. That's why you need some professional help. That's my personal opinion, at
Yeah,
least, because there's no way to tell.
yeah.
There's really no way. Even for us, it really takes weekly touring and a lot of research, a
And
lot of
phone calls to our
yeah,
colleagues in the market who have pending properties, and it's an art form
yeah.
to figure it out.
Exactly. It's not so simple. It's definitely not so simple. I first started in this business, I had thought that the price per square feet is, should be fairly black and white.
Not in San Francisco.
Not in San Francisco. First of all, what's a total square footage? That conversation we can talk for half hour, right? What's included and what's not. And then neighborhood, and it can be very, very complicated. Just a very interesting market to work in, I'll say. Right? Our life is always
Yeah,
interesting,
never a boring day.
right? Um, Days on market, that's fairly straightforward. But, houses selling in San Francisco very quickly. So we are generally at 2 week turnaround, right? A house
And
on the
days on
market
market, as you put it in this chart, this is days on market until the property goes pending, or days on market until it's
contract.
contingent.
Contract.
Okay.
Yeah. In contract, right? It could be pending too, but in contract. That's how we define it. So in San Francisco, we generally do, 2 weekends of open houses. We have a couple brokers tours, but basically a property is on the market for, at most 2 weeks generally. A hot property might be just a couple days before it gets in contract. This is the medium. So the range can be anywhere from 0 to 30 or more. So, but generally speaking, if a property comes on the market, the chances are it's going to be, sold very quickly.
Yeah, and in general, it looks like the trend over this time period is really, with some bumps up and differences, but trending down.
Trending
Faster
down.
into contract.
This year, especially because there's such a low inventory. That goes back to the inventory because we have no inventory, and therefore each property just gets sold very, very quickly. And then this is a similar chart for condos. It's very much the same metrics, but a little different set of numbers. So for example, the median price on condos, you can see that it went up, then came down, and stayed down in 2024. So it backs up to our point that, it's a good price to buy condos. Percentage of list price received used to be hot condo market overbidding, and then not so much anymore, not lately.
And I think we're really still recovering from the COVID effect of people not wanting to live in larger buildings and be in elevators and all of those kinds of things. And I think that
Yeah.
that over time it will recover. But I do remember in 2018, 2019, there was a huge sort of, it looked like things were changing towards almost more communal living situations and larger buildings and transit first. And COVID just kind of blew that whole thing up.
Yeah, definitely. COVID changed everything because another thing to point is a lot of condos are in financial district, South Beach, Mission Bay, those areas. And a lot of people are still not back to the office full time. I think majority of companies say 2 to 3 days per week. So the demand on the necessity of living right by the office is no longer there. Therefore, you see a lot of more vacancies in that part of town. than the western part of the city, let's say, right? Or
And
even the
also
northern part of the city.
people, until they fully get the downtown area back to higher occupancy for the businesses and the offices, a lot of people don't necessarily want to live in an area that feels a little bit, um, you know, not abandoned, but
Yes, it is sort of
but it is,
abandoned.
and that really is starting to change, and they have
It
been
is.
putting things forward to change that. But I was reading, that there was like 36% commercial vacancy rate,
That's right.
which
I
is
mean,
very high. But there are changes that are happening, and I think from being down there a lot recently, I feel very hopeful for the future.
yeah, our city is recovering. It's not nearly as bad as what you read. So that's what I got to say.
Exactly.
Yeah. I mean, we both love living and working in the city. So do a lot of other people. In fact, the trend is more people are moving back. So it's a time to just look into some of those
Yep.
condos.
I've been seeing a lot of Texas license plate, and I think that's the
Really?
people who moved to Texas coming back.
It's too hot. Oh, yeah, that's true too.
Hurricanes, hot weather, etc.
Hot weather. That would definitely be, yeah.
Sometimes the taxes are worth it.
The weather here is definitely so much better. Days on market much longer than single family homes, as you can see that, but shorter than last year. The days on market is much better than last year. Just saying, we are picking up for sure in the condo market.
Yes.
So that's all the data we have, but we also want to talk about seasonality, right, Amanda?
Yes.
Because that's a very important
aspect of our market here in San Francisco, and a little bit different, the seasonality here than I think some other places in the country. I know a lot of people have asked me who are buying from out of state, like, isn't summer like the biggest season that you have? And in San Francisco, summer is definitely not the biggest season in terms of sales for a couple of reasons, right? One, the weather, right?
Yes.
The weather in San Francisco is not the same summer that everybody else has. We have the sea breezes, the fog.
It's very cold. It's very, very cold.
And foggy and all those kinds of things. So not the greatest time to show properties, especially in certain areas of the city. And then a lot of people, because they live in a city, and I mean, all over the place, I'm sure, but go on vacation, right? They go out of town, and I think sometimes the agents even more than the actual buyers and sellers.
You need a break too, right?
But yeah, so there's people are out of town, the weather. I think for a lot of people, it's a good time to sell because there's always demand in San Francisco, and with the low inventory, there's reasons why it's a plus. But yeah, winter, obviously the holidays, those times get down, and summer. But what are our hot seasons in terms of the market activity?
It's, used to, I would say spring and fall. Mm-hmm. But now I'm changing my mind is if you are the seller, yes, if I'm the seller, mm-hmm. I will put on my property on the market beginning of the year as early as I can. January. Yes. End of January, not very beginning, because people are still
end of January, beginning of February. Yeah. I love that time because actually our weather is pretty nice. You get sunny days and crisp sunny days, and everybody's back, right? They've had the holidays, they've done all that, and the other properties aren't on the market yet. So you have the lower inventory that you're fighting against. You have usually pretty decent weather if it's not raining, and
the buyers out.
And the buyers are already. They're back. They're back from vacation. They're back. They're settled, and they're looking for something to focus on.
Yeah. So generally, from February through maybe beginning of June is one of our high seasons. Definitely. And the second one would be fall. Now it started a little early. I would say probably second half of August, all the way until mid-November will be our second season.
Yeah, right before Thanksgiving. Then it goes dark through. That's the one time of year that I really would say don't put your house on the market between Thanksgiving and the first week of January, unless you absolutely have to. That's the one time period I would. Almost every other time period, I would say there's a reason or a way to make it advantageous to you, but not between Thanksgiving and first week of January.
Yeah, not if you have any other options. Definitely not.
Correct.
So that's why a lot of times people just take properties off market until the
or
next
they
year.
leave it on coming soon in the MLS, so it's not counting up the days and all of those things.
Yeah. Anything else about San Francisco market you think we should cover?
Well, it's a unique market. The housing inventory is so varied and it's around the city. I mean, there are so many, and that is one reason why, unlike if you're looking at a suburb somewhere in the Midwest, right? Price per square foot, a lot of places in the country, you can just go by that for pretty much any property, right? Not San Francisco. We have things that were built just yesterday. We have things that were built in the 1800s. I mean, the variability of our housing stock is one of the things that I think is really cool about the city, but it does make it more challenging to find value. So I think with that and the pricing strategies that you see here and the complexity of the transactions and all those kinds of things, great to have a professional on your side who can help you feel your way through that.
Yeah, I was going to add a couple of things. For example, the year. People always ask me, which year was this house built?
Mm-hmm.
Okay. It's never so simple again. So, in certain neighborhoods of the city, let's say West Portal, everything will show 1924, 1925, because that's the time the entire area was developed. But it has nothing to do with the condition of the house, whether it has been fully updated. The house could have been pretty much a brand new house, still says 1924, because per city planning code, if
unless you completely rebuild the whole structure,
right,
it's still going to retain the original build date.
Yeah,
which makes sense. But
most houses are like that. They will retain one piece of it. It will still be 1924 house.
Yeah.
Even though other than the front wall, everything else is new.
Yeah.
So things like that, or whether it's permitted, not permitted, whether the square footage include the downstairs unwarranted space.
Some bonus rooms that don't have quite the ceiling height to be legal. I mean, there's so many different variations and things to be aware of in terms of any illegal living spaces. So there's a lot. It's a complex market, and if you have questions, you can, of course, reach out to either one of us, and we'd be happy to help you.
Absolutely.
So,
thank you.
Yeah, thank you for joining us. And if you have any additional questions, please do reach out, and we'll be happy to answer or address things on a future podcast.
Yes, absolutely.
Have a great day.
Bye.